Imagine you open up a trading chart for the very first time. For most people, it just looks like random candles, green ones going up, red ones going down. But here's the secret. Pro traders don't see candles, they see a story unfolding between buyers and sellers. Every single candle is like a message from the market telling you who is winning the battle right now. A big green candle, that means buyers are stepping in with strong force. A sharp red candle, sellers just took control. But it's not just the colors, it's about the context and what's happening around that candle. Let's take an example. Suppose the price of Apple stock is climbing steadily, and suddenly you see 3 big green candles in a row. A beginner might think, wow, this is going straight to the moon, and rush to buy. But a pro trader looks deeper. They notice that after those 3 green candles, a tiny red candle appears. That's hesitation. That's buyers slowing down and sellers starting to test the market. A pro trader immediately asks, are we about to hit resistance? And in many cases, that's exactly where the price struggles to move higher. Another example, imagine the S&P 500 keeps bouncing every time it touches a certain level. Let's say 4,500. Each time price hits it, it shoots back up. A beginner might think it's just luck or random movement, but a pro trader recognizes this as a support zone, meaning big money, like institutions and hedge funds, are stepping in there to buy. That's not luck, that's a clue. Now imagine watching the market like a movie. Each candle is a scene, each trend is a storyline, and every bounce or pullback is part of the drama. Pro traders don't just watch candles appear, they connect them like puzzle pieces to understand the bigger story. They see when buyers are gaining momentum, when sellers are testing strength, and when the market is about to shift. Once you start looking at charts this way, the market stops feeling random. You start seeing patterns, clues, and signals that give you an edge. This mindset, the ability to read the story behind the candles, is the very first step toward reading charts like a professional trader. Now that you understand how every candle tells a story, let's take it one step further, spotting the bigger picture. Pro traders don't just zoom in on one candle, they zoom out to see the trend. Think of it like this. If you're watching a football game, you don't just stare at the player holding the ball, you watch the entire field to know which team is dominating. In trading, the field is the trend. If the market is making higher highs and higher lows, that's an uptrend, and buyers are in control. If it's making lower highs and lower lows, that's a downtrend, where sellers rule. Simple? Yes, but powerful. Let's bring this to life with an example. Imagine Tesla stock keeps climbing, making a new high, pulling back a little, and then pushing to an even higher high. A beginner might jump in at random points, but a pro trader waits for those pullbacks. Why? Because buying during a pullback in an uptrend is like catching a train at the station. It's safer and smoother than chasing it while it's speeding past you. Now, flip it around. Picture Netflix stock dropping for weeks, every bounce getting weaker than the last. That's a clear downtrend. A beginner might think, it's cheap now, time to buy. But a pro trader knows not to fight the trend. They either short the rallies or stay out completely, because swimming against the current is how traders drown. This is why trend reading is non-negotiable. Once you spot the direction of the bigger flow, every candle, every pullback, every breakout starts to make sense. It's like turning chaos into a roadmap. And this is the second building block toward reading charts like a pro. Once you can read trends, the next big skill is identifying key levels, support and resistance. Think of them as invisible walls on your chart where price often reacts. Support is like the floor. Whenever price falls to that level, buyers show up and push it back up. Resistance is like the ceiling. When price rises to that level, sellers step in and push it back down. Pro traders pay very close attention to these zones because that's where the real battles between buyers and sellers take place. Picture this. The S&P 500 is climbing and hits the level of 5,000. Suddenly, the rally stalls. Candle after candle touches that level but fails to break higher. A beginner might get impatient and keep buying, but a pro trader knows this is a resistance zone. Until price convincingly breaks above, it's dangerous to go long. Now imagine the opposite. Price keeps dipping to 4,800 and every single time it bounces back. That's a strong support level. A pro trader waits for price to come back there because it's like a discount entry point with limited downside. Case study, Apple. Let's say its stock has been trading between 170 and 180 days for weeks. Each time it nears $180, sellers push it down, and each time it nears $170, buyers step in. A beginner might think it's boring, sideways action, but a pro trader sees a gold mine. This is a well-defined range. They can buy near support, sell near resistance, and wait for the breakout that will eventually come. Support and resistance aren't just lines, they're footprints of big players, institutions, and hedge funds moving money. When you learn to mark these levels, suddenly the chart stops being random. You'll know exactly where to watch for reversals, breakouts, and fakeouts. And this skill takes you even closer to reading charts like a true pro. Now that you can read candles, spot trends, and mark support and resistance, the final skill is combining all of it into a clear trade plan and executing it like a pro, because knowing the theory is useless without disciplined action. Imagine Nvidia is in a strong uptrend. Price pulls back to a well-tested support zone, and on a lower time frame, you notice a small green rejection candle forming exactly at that support. Higher time frames still confirm the bullish structure. A beginner might panic and enter too early or chase the move, but a pro waits patiently. They plan entry at the close of that rejection candle, stop loss just below the support cluster, because that's the line where the bullish structure would fail, and take profit near the next significant resistance. But the real skill is risk management. Only take trades where the reward is bigger than the risk, for example 1-3 or 1-5, and size the position so a single loss won't hurt your account. Now consider a different scenario. Amazon is stuck under resistance, attempting breakouts 3 times, but each attempt fails with lower volume. This is a classic distribution pattern. A pro trader doesn't blindly buy. They either short the rallies with tight stops or step aside until a clean breakout happens with strong conviction. Another layer is trade management. Trail your stop when price moves in your favor, lock partial profits at logical levels, and don't let greed or fear dictate your actions. Finally, the mental aspect is crucial. Treat trading like a business. Follow a checklist every time. Trend confirmation, key levels, candle signal, risk to reward, and accept that losses are part of the process. By repeating this loop consistently, scanning for trend context, identifying key support and resistance, waiting for confirming candles, sizing risk properly, and managing the trade, you transform what seems like chaotic charts into repeatable opportunities. This is exactly how pro traders read charts, make decisions with confidence, and act strategically instead of emotionally. Over time, this disciplined approach is what separates a successful trader from a beginner. If you found this video helpful and now you see charts with a new perspective, make sure to like this video, subscribe to the channel, and drop a comment below about what part of chart reading helped you the most. And if you want to take trading to the next level and actually trade with me, just send me a message on Instagram. Let's grow together as disciplined traders.